Hey, what's up guys? Here's another video update on my position so far. So since my last update, there's been quite a bit of development. If you notice, the market has been going down quite a bit, and yesterday the market went up like 3% on NASDAQ, but then today it fell another 1.69%, which is pretty bad for our long-term holdings, but we're hanging in there. I hope you guys are too. So here's an update on my positions. Since we last talked, we actually closed quite a few positions. So first of all is Rockets. I closed this at 68 because I didn't know that there was earnings coming up, so I didn't want to hold through the earnings. So I closed it at 68 with a pocket a $11 profit. Not gonna complain about any profits, even though it's only $11. But I kind of regret that decision because if you look at Rocket today, it just blew up, went all the way up to 43. So there's like a short squeeze going on right now with Rockets. But hey, we made our decision. We're gonna own it. So yeah, but I'll keep an eye out on Rockets because if you look at our scanner widgets, Rocket's been talked about quite a bit in the chat rooms or in the community. So it seems like this is going to do another thing similar to GameStop, so we'll keep an eye out for it. If you look at the IV reports, Rocket's nowhere here, but this is not really updated out often, but GME is still on top with the highest IV right now. But definitely keep an eye out on Rocket. So we close that, and then let's move on to another position that we closed, which is QuantumScape. We closed it at $25 value for a profit of 70, so that 95 premium. We bought it back for 25, so we have a total profit of 70. Closed it like 2 hours before the markets closed on that Friday because I didn't really want to hold 100 shares of QuantumScape at 53. So I was like, you know what, this is all getting awfully close to my strike, and I don't really want to hold 100 shares. And I'm already at 80% profit, so I'm just gonna close it right there. So take a profit and run. Not bad. So let's talk about the positions that we got assigned on. Fastly is the first one. We sold the puts for $76 strike price on Friday, and the market closed on Friday like around 72, 73-ish. So we are down like 300 bucks on that, and we got assigned at 76. So that means we bought 100 shares of Fastly automatically at $76, and that's $7,600 in Fastly right now. So, but you know, we sold a put for it, so we collected $128 in premium. So that's not bad. I mean, we offset our buy-in by a little bit, but we collected 128 total, and we don't mind really getting assigned on Fastly. And but today's not looking really good. It's down like 8% today, so it's down like $6. But yesterday, I'll tell you about the call later. So that's the first thing we got assigned on. Now the second option we got assigned on was AMD. So we got assigned on AMD for 85 strike price. So we collected $54 in credit, so we collect that in full. But AMD on Friday closed at about 84.5-ish, really close to our strike price. So I could have just buy back my option and it's not get assigned, but I'm actually comfortable getting assigned on AMD because I can wheel it right after, so I'm fine with assigning it. So that's $8,500 that we had to lock up on. We had to buy 100 shares of AMD at 85 strike price. So AMD right now, even after the off all day today, it's trading at 84.13. Not bad. So let's talk about the other portion of the wheel. So the whole reason we're doing this trading strategy is we want to get assigned on stocks that we want to own so we can turn around and start selling calls for it. And that's exactly what we did. So for Fastly on Monday, so this is yesterday. Yesterday, Fastly went up quite a bit. I mean, it went as high as 77.19. So it closed at 77 bucks. So I was looking at a chart. I'm like, hey, you know what? It's going up, and it seems like $75 was a good time to sell it, but I should have waited a little bit, but that's okay. So when Fastly was trading at $85 yesterday, let's see, was trading at $75-ish here. I sold a call for Fastly. So it was a weekly call. So it expires this coming Friday for a strike price of 78. I was able to sell this call for $170 in premium. So somebody paid me $170 to buy this call off me. Like $78 strike price by Friday with 4 days to expiration. So as you can see, Fastly is trading pretty bad today. So it was down 8%. So it's trading at 70.90 right now. So I think there's a pretty good chance that this call is going to be worthless by Friday, and I can collect this $170 in full by Friday. Right now I'm about $140 in profit on this one, really close to full profit. So we'll see what happens tomorrow. If Fastly goes up, that's fine. As long as it doesn't go past 78, I should be able to do this nicely and collect this premium either way and get my shares called away. So if I do get, if Fastly do end up above 878, I collect $170 plus $200 extra. Why? Because we got assigned at 76, so we bought 100 shares at 76, and here we're getting called away at 78. So that's $200 profit because we have 100 shares. $2 difference times 100, that's $200 extra, plus the 170 in credit. So that's about $370 in profit, which we love. So ideally, I would love to get called away for this option. So let's hope that Fastly go up above 78 by Friday. And if not, I can continue to sell this call and continue to collect premium, which is nice. Now the next stock is AMD. I sold a cover call for AMD yesterday as well when AMD was trading at 85.75. When it was trading at 85.75, I look at the options chain. I was able to see that there's a weekly call for AMD for $88 strike price, and I was able to sell that call for $69 in premium. Not bad. So similar to Fastly, if AMD goes above 88 by Friday, I get my shares called away and I collect the $69 premium. However, I get called away at 88 bucks. So remember, I got assigned AMD at $85, 100 shares. So 88 minus 85 is 3. 3 times 100 shares, that's $300. So I'll be able to collect $300 plus $69. That's $369. So if both of our auctions get called away by Friday, we'll be able to collect about $740 in total profits. So amazing. So let's hope the market go up by Friday, and if not, we'll just continue selling. So this is the beauty of this strategy of the wheel, that you get to wheel these, like turn around and sell the call when you do get assigned for even more credits. You just keep doing that until the option get called away. The only danger is if the strike price, if Fastly or AMD keeps going lower and lower, you have to it might take you a long time to complete the wheel. But that's fine because you will keep your average cost down lower and lower little by keep selling these calls. So that is a strategy right now, and I hope this makes sense to you guys. And there are a couple of other videos on my channel that tells you this strategy, so keep an eye out. And yeah, that is it for this video. I hope you guys find TradeIV videos useful, and TradeIV.com, the app is really nice if you really want to find stocks to look for, have a watch list, and and this scanner widget is really useful for me to figure out what's trending right now. And this widget, especially the IV widget, will tell you what stocks are selling at high premium, so you can sell some of these puts or calls for them, and you get a lot of money from it. And there's a nice crypto widget as well if you want to track it. And yeah, sign up, TradeIV.com, sign in with your Google account, and no sign up needed. I hope you guys enjoyed this video, and I'll see you guys next time.